Hi there traders. I've been writing a fundamental crash course for you all, and I thought that in the meantime you may get some benefit from me providing you a Forex fundamental snapshot of the economy, how it is right now from the perspective of all the central banks. So let's get into it. We'll start off with the European Central Bank, the ECB. With the Eurozone's long list of well publicised economic and physical woes, it's not surprising to see that the ECB holds the wooden spoon for being the most downbeat economy of all the major central banks. Recent data also suggests that the worst isn't over yet, as deflation pressures seem set to continue into the future. Also, the ECB just announced a major quantitative easing program to help complement a series of rate cuts that were announced last year. So with this, I expect the ECB to now sit back a little bit and see if this additional monetary policy will help the super dovish situation. But if we don't see any improvement, expect to see more downward pressure of the euro currency. Okay, so let's move on to the Swiss National Bank, the SNB. It's also another dovish one. Due to their recent moves of negative interest rates, it costs you money to put money into their bank. We've all seen the removal of the euro versus Swiss franc peg, and this was a very big move to try and stop the euro costing them a fortune in attempting to maintain a competitive currency for trade reasons. It was costing them a huge amount of money. And this week's economic data also came in mostly in the red, confirming that Switzerland's weakness still remains purely from being pulled down from the Eurozone. Trade activity and manufacturing also indicated industrial contraction. I think the Swiss will continue to experience tough times due to the European situation, and this will be reflected in their currency. It's worth noting that the peg has now been removed. We shouldn't see the same level of high correlation between the euro versus the USD and the USD versus Swiss franc that we had previously. So keep that in mind. The Bank of England. So the BOE is in a better condition than the previous two, as their economy is quite stable in these volatile times. In fact, they're on the verge of an upbeat bias. But we now have currently all members of the ECB in a cautious camp. So they're all agreeing to keep rates on hold for the time being. And this is due to the lack of inflationary pressures, and this is stopping them or forcing them to alter the policy any further. The reason for the recent downtrend in the Great British Pound currency has been due to previous indications of a rate hike by the BOE, but now they've moved back to a more cautious or neutral stance. And they're doing this just while inflation threats look non-existent and the European situation maintains global unease. So they're sitting quite well, and they can sit back and hopefully watch the rest of the world correct the issues they're having. Let's have a look at the Australian Reserve Bank. It's no surprise that the Australian Reserve Bank is also in the dovish camp, given its recent interest rate cut and indications of further things aren't looking like improving. Glenn Stevens also pointed out several dark clouds ahead, and with trade revenues, employment outlook looking weak, export demand tumbling along with China's profits, Australia's trading buddy, and local data also amidst concerns. So once protected from the global economical concerns and the GFC due to the mining investment boom, Australia now looks set to be faced with major adjustment of their economy. They need to fill the void that the rapid mining expansion phase once fueled their economy. So we'll see how they're going to handle that, but I don't think the Australian dollar is in for a pleasant time. The Reserve Bank of New Zealand, let's have a look at the RBNZ. Unlike its Australian cousin, they're in a healthier position, and they're normally put in the same camp. Sitting in a cautious and neutral position, the RBNZ's meeting decided to lose the hawkish tone vibe from their statement and move back to a more neutral stance. And that they also mentioned that a rate cut or a rate hike could be either move. So they're in a very neutral stance. Governor Wheeler also cautioned that the inflationary is likely to fall below their target at some point. But for now, things don't look that bad. They're trying hard to not stoke the housing market as they potentially have a bubble. But they also have green shoots appearing in other parts of their data, including an impressive employment reading and consecutive price increases from their dairy auction. So it's not surprising that the RBNZ is in a neutral stance. But it's worth noting that given the divergence of the Australia's economy and New Zealand's economy, it's not far-fetched to expect to see the currency pairs at or below parity into the near future. So it's one to keep an eye on. Normally Australia and New Zealand are put into the same camp, but they have very different economies. Let's have a look at the Bank of Canada. The BOC, with oil prices heavily publicised in the media being at very low levels, it's starting to affect the Canadian economy. The BOC did, however, surprise the market with an interest rate cut last month, which was a proactive and cautious move, trying to get ahead of the downtrend for global demand. With recent data supporting the Bank of Canada's move, the likely downbeat PMI is suggesting that hiring and spending for business sector is also in for darker days. So the central bank's proactive move and recent statement holds them in a very dovish camp, but it also prepares them to take further action if required. So they're one of the very few banks being proactive in the market today, and it may work out well for them. Let's have a look at the Bank of Japan. The BOJ has been very quiet about its monetary policy bias, and this suggests that they are just hopeful that the economy may do much better. Although the Bank of Japan is maintaining a neutral stance, a wait-and-see stance, I personally see the condition as more towards dovish. As the Japanese consumers are still furious about the increase in sales tax recently, and this has also produced some very disappointing household spending data and retail sales figures. Business confidence has also taken a hit, and conditions do look bleak in the industrial area. So there is a little concern there. Core machinery orders and also industrial production orders are also down, which is a very big part of their economy. So the current data certainly points to a dovish condition in my view for Japan. And this could continue to weigh on their currency until circumstances show signs of improvement. So I'll have to wait and see, but I think they're sitting and hoping for now. And lastly, let's have a look at the US Federal Reserve. It's actually the rare shining light in the currency market at the moment, in the global economy at the moment. So the Fed is openly hawkish, and they are baiting the market to prepare for a rate hike in the near future. And this is really supporting the US dollar. We are starting to see the impacts of global lackluster starting to show its head into the inflationary and consumer spending estimates within the US economy. So there are signs there that the global impacts are rearing its head. Although the Fed is hawkish and preparing for the next move in the interest rate to be a hike, we could see them emphasise their recent addition to the policy statement, can be patient, and hold off that the interest rate until the time is right. Of course, the market right now is driving the US dollar higher on expectations of this interest rate hike. But if it's dragged out and they are being more patient, the rally could stall and it could come off a bit. I'm not trying to scare you from the US dollar, because having said all that, the US economy is definitely the strongest in all the major economies. And it looks to remain that way, with not far behind the UK economy. It's sitting quite well, and an interest rate hike for them may not be too far off. Won't be this year, but not too far off. Well, that's it for my Forex fundamental snapshot. I hope that brings you up to speed with the monetary policy biases, and I hope it explains the reasons for the current price action. I want to do more on fundamentals, as I think that it can really add value to your trading into the future. So please don't be shy to leave your comments, your opinions, your questions on the social media pages at Forex Nation TV. But for today, that's it, and until next time, trade well.